we should be going south today, right? Because right away the market turned around, and then the new candle at 740 or 840 kind of became dominant, right? It engulfed the previous one. So that was a positive thing. We had some continuation candles here. Then in the open, boom, big red candle. Sellers came in and said, no. And this didn't look really good until the next 10 minutes. Then the next 10-minute candle, not only did buyers come in, but they basically said, all right, we're the tone of the day today is positive right now. So far, knock on wood. Now this really big candle here, this is going to be my dominant candle. We talked about in the past, we've talked about keystone or cornerstone candles. I'm confusing everybody with those words. So I'm going to stick with dominant candle, right? This is a dominant candle. In my mind, it's usually, it's almost 50% bigger than any other candle that you see, or significantly bigger anyway. And in this case, this is a dominant candle, very positive. As we could see right now, we're trading at 45 right now, which is pretty good. So from a trade idea point of view, and I really am looking for areas where I'd like to buy today, at least right now. I'm not looking to sell right now. I want to see what happens at the top here before we could establish some kind of area of resistance. I'm going to draw my rectangle really fast up there, and I'm going to kind of pick off these highs, right? And pick off these highs. And I'm going to kind of draw it across and say, all right, this is right now, so far, it's early in the morning. This is my area of, excuse me, resistance. So from being short point of view, if I were to go short, which I'm not because I'm looking for places to buy, I would wait to see penetration into this rectangle here before I pulled the trigger to go short. And again, it's a conservative point of view. That's kind of how I look at it. Morgan, I'll go over all these settings for sure. Okay, I will, Herbert, for sure. All right, so let's take a peek. So where's maybe some good places to consider? Hey, where do I want to go long at? Well, point of control is a very obvious place right here. Now, the one thing I want to do when I look at this point of control, I want to add a Fibonacci line, even though it might be temporary. I want to add a Fibonacci retracement. Fibonacci. There's no R in it, right? So it's Fibonacci. I got to get better at saying that. I really do, but I will. All right, so let's just kind of pull it off to the side here so I don't interfere too much with the chart. And I'm going to go high to low or low to high. It doesn't matter. It's a ratio, right? The Fibonacci sequence turns into this ratio. And 61.8% is our first target, just south of the point of control. Second, 50%. 50% is not really a fib number, but it's been in the Fibonacci sequence. It's been in the Fibonacci sequence retracement tool for so long, on every single trading software you've ever seen, that that it's significant. It's significant, so we're going to keep it. Then the 38.2% is the other number here. So from a conservative point of view, maybe we're going to wait to get somewhere between 61 and 68 south of the point of control. And I'm looking at this low candle look here, and I'm envisioning a scenario where we don't make a lower low. We get close, but we don't. So again, I'm going to make sure my chart trader is on, chart trader hidden in this case. And I'm just going to go ahead and I'm going to right click my mouse. I'm going to line it up just kind of south here, just a little bit above that wick. And I'm going to go ahead and say, hey, buy limited 44. All right, so that's my first. Oops, I didn't want to do 10. What's the matter with me? Whoa. Slow your roll, Jim. All right, that's better. Why didn't we have 10 on there? What was going on? That's why. All right, my default was set at 10. I'm going to set this to 1. And then we're going to go back here to hidden. All right, that should cure that problem. All right, so now let's talk about all the other stuff that we need to talk about. And by the way, before we go any further, I do want to see this transition line between the bottom of the value area and prices below value as a possible second unit. And you can see that blue dotted line going across. In the blue dotted line, let me just kind of show you what that is. Dashed line, I guess, dash dot. Prior day open, high, low, close. Now I have the prior day's open turned off. Oops, I got to change this to each tick. This is exactly what the question was earlier today. Calculate on each tick. Sorry about that. But in this particular case, these are fixed numbers anyway, right? It's yesterday's. These aren't going to change. But this was the question that someone asked about before about, how do you set up your indicator? Make sure it's on each tick. Prior open, I don't care that much about. Prior close is that dotted line we saw. The red, which is off the screen, is prior low, and the green is prior high. So that's what that line means. So we're looking at the prior close right now when you see that dash, right? Dash, dash, dash. And so again, the idea is, hey, second unit, maybe we're going to go a little bit lower, and we'll have a relatively tight stop if we decide to do that, because we're retracing back below the 50% line right now. So we're going to wait to see if we get filled. We're going to check out the CCI, the moving average cross, the momentum, and all that stuff before we make that decision. All right, let's take a peek. Let's look at the daily chart. Now that we got that trade in there, daily chart, don't worry about the ATR at the bottom of this panel here. We're going to talk in detail about ATR. It's really a measure of volatility. Someone suggested, use the word flip yesterday, and then me and Morgan were scratching our heads like, I'm not sure what flipping is, but we'll talk more about ATR in a second, so don't panic. All I did was simply just drew a trend line. And this was also pointed out to me yesterday. Low to low, almost a low, and to actually the low today. It's amazing how sometimes these trend lines exactly line up. Now, what this is suggesting is, as we continue to cycle or oscillate, or really cycle, I think, or wave, there's wave patterns here up, we keep testing this trend line, which is a really, really handy thing. We start closing behind this trend line, and then I get a little bit worried. I get a little bit worried about what's going on. And from a Fibonacci retracement point of view, there's a couple different ways you could place a fib line here, and I'm going to go ahead and show that also. Just go to fib, and let me get my crosshairs out so I could better show you. All right, we're filled on that order. I can go high to low here, right? This gives me really, let's just leave it here for a second because we got to toggle back and put some trades on. I'll come right back to this. That much, I promise. All right, so now we're in it. We got some work to do now. We have to decide, do we want to try to get a second unit? Do we want to try to just leave it as it is and let it go for a while? And is our bullish sentiment pretty good? Well, the moving average cross is kind of going, touching right now. It's no longer crossing over with any amount of velocity. And a lot of times on these crossovers, you want to see confirmation on the very next candle. And here we didn't get confirmation on a cross, right? Didn't happen. CCI, wow, it moved down pretty fast. This is not good for our trade idea. It moved down very, very fast, right? So we were at a positive 100 state, and then within a candle, we're crossing the zero line. Zero line crosses, in my opinion, are kind of important. If we continue down to minus 100, then we're in trouble. So let's kind of straighten things out right now. And the first thing I want to do is I do want to put some sort of catastrophic loss limit in here right now. And the trick is, the problem is here, a lot of the times these wicks at the bottom are targets right now. And so I'm going to really kind of look at the volume profile and say, hey, we had a little bit of volume here at 35.5. It might be a good place. Alternatively, we might want to be more patient than that. And then if we look at these wicks here, there's a wick, lower wick, a lower wick. I'm going to really kind of focus on this wick right here and say, okay, this is going to be kind of right now from a catastrophic stop point of view. I'm going to throw this in, and if we're wrong, we're wrong. I'm going to go right. I want to go south of it though, so we're going to go right click, and this will be a buy stop, right? This will be a buy. I'm sorry, I'm long. This will be a sell stop. I'm going to go ahead and click on it. Okay, so now we can stop and breathe a little bit, and I want to kind of look and decide, do I want to do a second unit and kind of go for it, or do I want to kind of, let this thing kind of breathe a little bit more and see what happens on the next candle? And I think the latter is probably the safest way to go, especially with the CCI kind of already minus 32. Moving average cross is kind of sitting there. Now let me make sure I have these indicators set to tick by tick. I'm going to go to indicators, and it'll open up the box. Okay, order flow volume profile, calculate each tick. Let's hit apply. First moving average, calculate each tick, that's good. Second moving average, calculate each tick, that's good. Prior day, we already talked about CCI, calculate on each tick. Okay, so we're all set there. So these things are moving properly. These things are moving properly. So let's get one more candle here going, another 6 minutes or so before we decide whether or not to get a second unit in or hold, which is totally fine. And I like, the 38 point. If we close below the 38.2%, my definition of retracement is over. Right. My definite, it's not a retracement anymore. The direction's the other way. How far the other way, we don't know yet, but that's kind of in my head. We have a candle that closes below this. That's not good. So let's kind of be patient. I'm not interested in risking a second unit yet as we're approaching our stop. Okay, so Herbert says, flip is no more than past support is future resistance. Okay, so okay, we'll hold that thought. We'll talk about that indicator a little bit more in a second. So Morgan, here's I asked about my CCI settings. Let me show you one more time. We'll go through it slowly since we have some time. Time is on our side right now. So my CCI settings, the standard, when you apply it, the default is 14. I changed the period to 20. That's again based on my experience, my opinion, based on the 10-minute chart. I like to see it at 20 instead of 14. So that's really the only thing I changed on here. Yeah, I did some color manipulations. I kind of highlighted the level 1, which is 100. Made it, width 2 navy. Zero line I made, red. This is just kind of visual things for everybody to kind of take a peek at. So hopefully that answers that question. Let's kind of close this up. The profile today is looking pretty good. It's looking kind of bell-shaped. Point of control is kind of high right now. We don't really have a competing point of control just yet. One could argue that maybe around in this level, 3850-ish, could be a competing area for the point of control shift. Remember, point of control is dynamic because it tracks volume throughout the course, right? It tracks volume throughout the course of the day. Okay, awesome. Thanks, Morgan. Jonathan, order flow settings. All right, we'll go back to that. No worries. Keep the questions flowing, and then we'll go to my notes. After that. So let's again. I'm just going to right click, and that's the ease of using the software. You right click, and something happens, right? So it's kind of I'm doing this with one hand. I got one hand tied behind my back, basically, right now. If you will. So order flow. Here's my order flow volume profile. I'll leave that up right now. This ticks per level, in my opinion, on a smaller range day, you could change it to 1. Each histogram bar will be 1 tick high if you do that, and you can see it gets a little more granular in the data. If you're going to add the volume numbers in the histogram bar, sometimes it's hard to do that, to see them, right, when you have that setting so small. And again, the volume profile gives you areas of interest. Everything gives you areas of interest. It's really hard because of the volatility in these instruments, and we can see it on the trading ladder, that you're going to get an exact answer, right? So setting ticks per level 1 isn't going to make that big of a difference if you set ticks per level 2. You get the general outline. You see where the point of control is. You could see where the transition between value and prices below value is. You could see the other transition above value. And that's it. So hopefully you got that. I'm going to go ahead and take that off. So let's kind of shrink this up here a little bit. And you could see it in the trading dome, right? You could see all the bids and offers on both sides, and you could see it kind of bouncing around a little bit. That's why it's hard to kind of pinpoint exact number, right? It's kind of hard to pinpoint an exact number. Again, we're waiting for another candle. We should get one in a minute or so to make a decision. Do we want to add a second unit, or do we just want to kind of let this trade get its feet on the ground and see if our original idea was correct? In the meantime, let's shoot over to my notes. Notes for today. Oops, this is wrong. First of all, this is the 15th. Let's change that on the fly. And that's the beauty about using a Word doc. Okay, yesterday we talked about this, patient. This is a quote I thought was interesting from Roy Bennett. Patience is not the ability to wait. Patience is to be calm no matter what happens. So that's kind of what we're doing now, right? We're being calm. This trade went against us 4 handles plus, right? And it was scary and we didn't like it, but we were calm. And, the market's going to do what the market's going to do. It's a continuous flow. There's not an end game. It oscillates up and down. It moves up and down. Price moves like a wave, in a never-ending wave. And this is what Mark Douglas teaches. It's not like if you go to you go to a horse race. There's going to be an end, right? There's going to be a start, and there's going to be a finish, and there's going to be a result. That's it. Here, there's no end. It keeps going and going and going. 23-hour markets, awesome for day trading. So constantly take action to turn into a positive growth opportunities and have faith to believe that it will all work out at the end while you are waiting. Now, I don't know if this is a trading quote or not. I don't even know where I found this quote, but it makes sense. And I like to apply it, maybe think about it. Patience is actually the ability to wait also. So this part, we have to have the ability to wait and be patient and we have a new candle formed, right, by the way. And Bob Farrell here. This was a good example for yesterday. And these first two things when experts agree, something else tends to happen, right? When experts agree, something else tends to happen. And this is a trading quote. And this is, this is a really, really good, really good quote in my mind. And we saw it yesterday, right? Look at my notes here. I moved my note from yesterday up high. It's big surprise up. Dominant candle did not hold. Now, remember, we had that CPI number yesterday, and we had a big dominant candle at the time anyway, at 8:30 East Coast time, 7:30 Central time, based on that CPI number, right? And so then when the open came, it was positive, big green candle. The opposite happened, right? The opposite happened. And this is really a case of wait for the cash open, see what kind of candle forms, and then make a decision. If you're not trading pre-market, you could afford to wait. Continue bear move at open, no reason to buy, which is what we did. We made a mistake because we were excited about the CPI number an hour prior, and that's what we did. Lower lows and lower high continued. So this was a really important note. This is the second time I've made this mistake in the last 6 months, and I'm going to try not to make it again. 7:30 number could be completely different than the cash open, depending on the circumstances. So be cautious, be patient. Don't use that 7:30 bar as the answer to set the pace, right away. MBA mortgage numbers. I'm taking a look at are you guys looking at the second candle here? We got a higher low, which is good. I am actually at a certain point inclined to try to get a second unit, but let's wait a little bit longer here. Let's see if we could get, if we're going to touch that at 38.2% again or not. 7 o'clock. Let's see, mortgage applications. I cut and paste this from Econo Day this morning. I didn't really read the whole report this morning. But they're positive numbers, right? The prior was minus 1.9. We actually got 0.3. And these, again, the housing market's kind of important to us. The in the mortgage folks are instrumental in that, right? They have the data. They know what's being refinanced. They know what's what the stats are, and so it's pretty good it's a pretty good kind of thing to track. Did it move the market at 7 o'clock? No, it didn't. But let's keep that under our hat. Hang on, guys. I'll get to those questions in a sec. Empire State Manufacturing Index came out. This is a relatively important one, and actual is 34.3. We blew the consensus out of the water, right? And so did that change? Did that help our 7:30 candle? No, but maybe it helped the 7:40 candle, right? I don't know. Oh shoot! I made a mistake. This is my bad. I have this position improperly. This actually is my arrow's in the wrong spot. This is the 8:30 to 8:40 bar. I'm going to kind of move it over to touch it. And then again, this is the this is correct. This one's correct. Sorry about that. I just have it in the way. So here's the link for that. I'm going to type this in case you guys want to read about it. Throw that in the message box. 8:30 import-export prices, Bureau of Labor Statistics. It's going in the right direction. You know, I don't know. You know, this is another one of those releases that you know, it's not obscure, it's not odd. You know, it gets a green star instead of a red. Red is really important. Green's kind of important. But again, I would look at that as kind of a positive, moving in the right direction type of indicator for import-export. Especially in light of, you know, we're coming. This is going to come into play pretty soon, right? When if there's it's not going to happen, but there could be a chance that, you know, the government runs out of money in October to pay obligations, right? And import export differentials kind of factor into that cash flow. 9:15 industrial production. The Fed issues this number. I don't know what the answer is. Didn't have a chance to check it out. I just cut and pasted in here. Didn't go back. Didn't have time to do it. Atlanta Fed business expectations came out while we were doing the presentation, and then the EIA petroleum status is the other big one for the day. Let's take a look at it. I'm going to read the rest of this, and we're going to talk about a couple other things that are important to me. From YouTube, Herbert, there is an end if you blow out your account. if you are the bank, unfortunately, and that's from, I'm not sure. I think that's from Herb or Jim, maybe. Anyway. I think we were talking about continuous markets and how they keep going no matter what. You know, your personal identity has nothing to do with the markets. Your personal opinion has nothing to do with price. You know, in the idea that I had the right idea, but the market didn't react the way it was supposed to is completely bad thinking, in my opinion. You know, the thinking is, hey, the market's bigger than all of us. Price is going to be based on supply and demand, and supply and demand is based on all sorts of factors past that. Fiscal policy, monetary policy, technical analysis, market sentiment, participant sentiment. All of those things are kind of related, right? So the idea that, again, there's no end game. It keeps moving, and it's out of our control. We have to adapt to the circumstance and take responsibility for the trade. Again, that's another Mark Douglas comment. Be accountable and take responsibility. And then, you know, my trick is, you know, I'm going to show actually, you know, what I'm going to write down my mistakes. By the way, I have a feeling that this should be over here somewhere. My bad. All right, so I'm not sure I was showing this when I was talking about it. Big surprise. So that was yesterday's. Again, I wrote it down and I saved it. I'm going to take a look at this chart here and we'll go back to my notes. Where are we at here? Where are we at? Let's open this up so everybody could see it. You know, we have 1, 2, 3, 4 red candles. We have a really low wick in the previous bar. This bar is a little bit less exciting. We're going to get another bar in a minute, and then we can make a decision. Do we want to try to get a second unit? And I'm inclined at this point to say yeah, because I think the momentum is slowing down on the downside. Moving average cross is just kind of, you know, the fast one wants to cross over. We have a little bit of a confirmation. That's a good sign. The CCI is starting to bend up a little bit. It's still kind of, you know, it's a long way from 100, but it's better than minus 100. So let's just kind of see what happens on this at the end of this candle and decide, do we want to add a second unit to this trade in anticipation of some upward movement? Now the point of control has shifted, right? Point of control is up. It used to be up here and it used to be at 41.5. Now we're down to 39-ish, 38.75. So again, let's give this some. We have a lower high, we have a lower low right now, and maybe we're not going to get another lower low at this point in this candle, since there's only like a minute left. So let's just be patient. Patient. The bottom of the value area is we're right at it right now, which is kind of interesting. The value area itself, 45 down to 36. That's 9 handles. That's not a lot. Okay, new candle is here. So right now, my inclination is, yeah, let's try to get a second unit right at that transition here. Oops, hang on a second. Let me get my crosshairs out there out. Right at that transition there, and then go ahead and do it. All right, so now we got that. We got to change our stop to 2. And it's changed. Let's see if we can get some natural volatility to get back down to 36. We kind of bounced off it. Maybe I pulled the trigger a little late on that, but that's okay. We're just going to wait to see what happened here. We're back to break even in the first unit. All right, going back to the notes. So, for those of you who are new, I kind of every morning I'll just write down what economic releases are coming out. This is planned news. We have a bunch of stuff that's not planned, which I'll talk about in a second, especially today. And then I write these down and I kind of look at what the consensus was, what the answer was, see if the candle reacted or not. And by the way, we do have to put a profit target up on our here in a second. I'll do that in a second. So the Hill, I wrote the Hill, Capitol Hill, House Ways and Means. I'm not sure where I got this quote from. Oh, thehill.com. There's the link. I'm going to go ahead and actually cut and paste this link for everybody. There's a lot of stuff going on, right, on Capitol Hill. The House Ways and Means Committee today is holding its 4th and final day of markup of its portions of the Democrats' $3.5 trillion social spending package. Lawmakers are expected to vote in advance to advance a large section of the bill that includes infrastructure, financing, tax preferences, renewable energy tax incentives, healthcare provisions, tax credits for low and middle income families, and tax increases on high income individuals and corporations. All these things are kind of important to the market reaction. And this is going to be unplanned news. There's going to be announcements and press and people stand. Our representatives are going to be standing in front of a podium in Capitol Hill and making statements and pointing fingers at each other and all that stuff. Or maybe there's going to be progress. Maybe this is going to get out of committee right now, easy peasy, and go forward. So this is kind of unplanned. We know what's going to happen, but we don't know what the answer is. We know something's going to happen. It might not happen at 11. It might not happen at 12. It might happen at 1. We don't know. Anyway, let me just go over here really quickly. Where do we want to put our target at now? I really like this wick up here. I think, I like where I drew my area of resistance, and I like the idea of sometimes us popping in here. Now, this is this would be an aggressive exit. I'm going to go ahead and just do it. I'm going to put an order in to sell one. Now, at any given time, as we manage this trade, we can start tightening things up, right? We can start tightening things up. And since we're so far away from the second entry, right now, and our duration for the trade is, half an hour at this point, I'm going to get rid of that. I'm just going to click on that X. I'm going to cancel it. I'm going to change my 2 stop to a 1 stop. And then all is good in the universe right now, right? All is good. I'll probably tighten up my stop. I'm looking at these 2 candles here to see if we can get any kind of, really good area of support down here on the next candle. And then we'll just kind of keep going. Point of control shifted back up right now. You just saw it happen live, real time, right in front of us, right in front of us. I want to see this wick attack though. So many times we see these wicks attacked. And so that's why I'm slightly south of it. We might bring it down. We might decide, hey, a more reasonable profit target is maybe the top of the value area, which is corresponds to the 76.4% retracement number, which I don't put that much stock into, but I left it on the chart just to leave it on the chart. The more I read about Fibonacci, the more it's just an amazing phenomenon, right? There's no real basis in science on why it works, but it's literally been, a part of technical analysis for so long now that it's almost like a self-fulfilling prophecy. Things happen. So Andrew, this is I want to talk about this. So Andrew says there's no way I would still be in that trade. Would have been stopped out a long time ago. Could only risk 2 points max. Why could you only risk 2 points max? I'm trading a classic E-mini S&P, right? The market behavior is exactly the same in the micro E-mini S&P, and you could take that much heat in most typical accounts. With the micro, remember, it's 1/10 the size. Now I don't know what your personal situation is. It might be different, but consider this. Consider the idea that the micros kind of move in a way, in the exact same way, and it's 1/10 the size. So your risk exposure is 1/10 what it would be with a classic, right? And don't kind of discard the idea that it's a $5 point instead of a $50 point, because it could add up, and you could take more heat. All things the same, you could take more heat and stay with it. So consider that. And maybe you do 2 contracts in the micro, which is 20% of the classic. Or maybe you do, 3, so you could scale in, scale out easier, all sorts of advantages. I agree with you, Andrew, that this is a big market, right? This is a big person market. This is, you could take it on a chin pretty easily. So you do need to be prepared with whatever your capital contribution is in your account, and kind of look at the ratio between that and the size of the contracts. Now, the beauty of the micro contracts is the CME has said, hey, we've literally, we've come up with a solution. We've come up with a solution. So I'm a fan of the micros, by the way, if it's not obvious for me talking. I'm a fan. So right now, again, we're up 4 handles right now. It's $200 on a contract. This is a sim account, of course. We're right at that the transition between the value area and prices above value. And there's a couple trade management things you could do. You can move your stop to break even and see if we can get some movement up. We could leave it alone. We don't have to do anything. We could bring down our profit target to, maybe a good point would be, the top of the value area. I don't know. And it just depends on really, how you're feeling about the chart the way it is. Remember, we're in a small range right now. And is there truly an expectation of a breakout on the upside? Maybe not. What kind of good news is there? Is there? So it might be more prudent actually to try to move this target down or move your stop up, either way. But that point of control is just above now our entry, which is a good thing. That's a good sign. So I'm going to be patient a little bit longer here. We'll see what we'll make some decisions here in the next candle. We got about 3 minutes here to make some decisions here. But buyers are coming in nicely. And again, I do see a lot of times these kind of weird outlying wicks do get attacked. They do get the market tries to approach it. Same on the downside. So let's kind of hang tight here, and then we'll make a decision in a minute. Questions, type them in. Be happy to talk about it. We're going to pivot over in a second to talk about the ATR, average true range. And actually, let's just show it before I actually add it and talk about it. I just want to show it. I got a little, sorry about that. Ignore this bottom part. Congress back after August recess. That was yesterday's note, and it's true. Appropriations, shutdown, debt limit, all that taxes, all that stuff's going on right now. ATR indicator, average true range. Wells Wilder's done some fantastic work in the past with all sorts of stuff. Here's one of them. The ATR it measures volatility, not direction, and it's subjective, right? It's a number. And it's kind of weird because it's a different type of indicator than others, in that you have to do 3 calculations to figure out to get to the average true range. The first thing you can do is calculate the true range, right? And now here are the 3 calculations. True range equals either the high minus the low, or the absolute value of the high minus the previous close, or the absolute value of the previous close minus the low. And whichever one of these numbers is bigger, then that's the number you use for the true range for that particular data point. Then you're simply going to take a 14-period moving average of the true ranges. And that's the calculation. It's kind of, it's different than other calculations, but we'll add it to the chart in a moment. Let's take a look where we're at now. We've got about another minute here before the next candle. Let's see what happens. Maybe less than a minute now. Stephen Ewens asks, we got a real first and last name. Awesome. we had Ankle Boo Boo and all these other ones in here. It's awesome. But Stephen says, can you talk a bit about your choice to trade a 10-minute chart? Yeah. So good question. So my guess is this might be your first time here. The 10-minute chart, when I'm looking at a time frame, and this is me, my opinion, my kind of style. When I'm looking at a time frame, I want the duration of the trade to be a multiple of 6. So right now, I want this trade to resolve itself one way or the other between 5 seconds and 60 minutes, right? 6 times 10 is 60 minutes or an hour, and that's the duration of our trading event, right? So that's how I look at it. Now, if it was a 30-minute chart, times 6, then again we would have a 3-hour period. If it was a 5-minute, then I'd have a 30-minute window for my chart. So that's just, again, that's just my kind of little nuance that I've kind of developed over a long period of time, and that's why I use the 10-minute chart. Right, all the indicators, all the analysis that I have on the chart, it would be the same on a 30-minute, right? I wouldn't add anything different. I would just do the same thing. If a position trade, day trade, I'd do something completely different. But here, because we're day trading, that's our thing. We're okay. That's kind of, hopefully that, and I mean, it's really the answer to your question, Stephen, is because that's the way I do it. But in my mind, I have that 6 times multiplier. All right, so this is interesting. Look at this candle here. Look at this candle here. The previous candle, right? The 1030 candle. We touched the top of the value area. It is amazing how that happens. So we're kind of value area bound right now, which is good, right? Because on a normal distribution day, this is kind of a bell-shaped curve, Gaussian distribution, kind of almost perfect, right? And a lot of times you have days like this where, you're buying at the bottom of the value area, you're selling at the top of the value area, and it's kind of like market happiness is right at the point of control. And that might be the kind of type of day we're seeing right now. I don't know; it's too early to tell, but there's some kind of logic to that. There's some kind of the news cycle is not kicked in yet. There hasn't been anything for price dislocation to happen. It's not a runaway trend day yet, and so the value area is really important to me today, right now. We'll see. Now, having said that, of course, we could just break on down, and all heck could break loose, or we could rally way up and take off like a rocket ship. Who knows? So, but we're seeing this right now. We're seeing this natural volatility that we could have exploited, right? We could have made our trades tighter. We could have made our trades tighter, and made more than just one trade. But we're not going to do that today. Well, all right, great question. So Mustafa says, "Aren't you afraid of a spike?" Well, no, and here's why. Because literally, I mean, I have my stop in. I have my target in. And so one of two things is going to happen. I'm going to get stopped out on a spike, maybe. Or I'm going to take profit on a spike, maybe. But this is kind of this is the analysis we've done. And I'm okay with it. And if we get stopped out, we get stopped out. We'll move on to the next one. And depending on how this candle kind of plays out, we might manage our stop a little bit dynamically. Let's just see. We still have a lot of time before this candle plays out. And again, we're just kind of bouncing around in the value area right now. So, but that kind of goes to also, Mustafa, that goes to this whole thing about this whole kind of conversation that we have about patience, right? Patience is really, really important, because there's the evil side is FOMO, right? Fear of missing out, or or fear of fear of missing out. And a lot of times traders will act on an impulse instead of some kind of science or some kind of technical analysis that they do every single day, day in and day out, to get some muscle memory, to kind of get a feel for what's going on in any given day. So that's, again, this is my opinion. This is how it is. But the whole, I don't know how many customers I've talked to in my career who have literally said, hey, I really want to open an account today. I want to get it funded because there's going to be a big move tomorrow and I don't want to miss it. And I'm always like, what? First of all, you don't know if there's going to be a big move tomorrow. Secondly, there's always going to be a big move, right? Remember, it's never ending. 23 hours, it keeps going. So that kind of FOMO then kind of translates itself to the screen when you're like, all right, I got to get in now. I got to get in now. I don't want to miss it. Believe me, there's going to be more opportunities later today, more opportunities in another market. We didn't even look at the micro NASDAQ yet. There's more, or crude oil yet. There's more opportunities tomorrow, the day after. So just keep that in mind. It's okay to miss something. The second best thing that could happen to you is you do not get filled on your trade. The first best thing is you get filled and you're successful. The second best thing is you don't get filled. And the third best thing is you get filled and you lose. Now, number 3 is not best at all, but those are the 3 outcomes, right? The third outcome is not good. The second outcome's okay. In any event, look at this. We're back up here now. We traded at the bottom of the value area. Now we're kind of driving back up to the top. Really, really interesting. Okay. Let's see. Wookie Snicker. Now, my guess is that's not your real name, but it might be. So I'm looking for a buy entry and a sell entry. Well, all right. So in futures, remember, right now I've bought one already, right? So let's take a look at what that is. I've bought one already. And in this little label here on the chart shows me there's a 1 in that box, right? That means I bought one contract and it's green, right? So it's color coded. If I were to sell a contract, it would be red. So I know I bought one. And then this is how many points I'm up or down, how many ticks I'm up or down based on my entry price. And my entry price is, I'll follow it all the way across, 44, 44 even, right? Now, eventually I want to get flat, right? And I want to get out of the position. Right. And so one way or the other, and I'm hoping it's positive, right? I'm hoping that I get my target gets hit, right? I sell it higher, right? I sell it higher and I make the profit. Alternatively, if the market goes against me and I get stopped out and then I lost money, right? So these two are associated with my position. Once one of these two things happens, I'm going to cancel the other one. And then I will be what's called flat. I won't have a position. I won't have any exposure, and the trade will be completed. Yeah, Stephen. So great comment. Stephen says 8-point reward versus 10-point loss. Is this a good ratio? Yes. Here's why. My stop is based on the candle. My target is based on the candle. Anybody who puts a formula out there that says, I'm going to try to risk 4 ticks to gain 10 ticks, you're applying a kind of a random formula to an actual, to a dynamic moving chart. So when you look at the chart and you decide what's a reasonable place to get it for your entry to happen, what's the reasonable point for your target, and what's the reasonable point for your stop, then you place the trades that way. I mean, right now I'm very confident that we're on the right side of this thing. I could be wrong, but by simply saying, 8 to 10 is bad, that's fake. You're making it up. Why is 8 to 10 bad? Why is it bad in your book? Is it because the candles are telling me something different? Is it telling me the CCI is telling me something different, or the moving average cross, or the volume profile? Why? Why is that not is bad in your book? Because some fake math in your head says, hey, this 10-point loss, gee, you're risking more money than you're possibly making. It's random, right? So anyway, and again, I'm getting kind of excited about this, but the idea is, let's look at the candle, let's look at the day, let's look at the entire field and say, hey, at what point am I willing to say I'm wrong? And this is the point. I'm willing to say I'm wrong. It's simple as that. I'm not gonna come up with a number. I'm not gonna not place this trade because I'm 2 ticks different or 2 points different. Again, that's again my personal thing. Sorry, I don't mean to get I don't mean to get on my high horse, but that's just based on my experience. And sometimes it's the opposite, right? Sometimes your targets are wider than your stop. Okay, so William says I'm late joining, but do you rely on double bottoms or tops? Yeah, sometimes. You know, double bottoms could show you where the area of support is. Double tops could show you where the area of resistance is, for sure. This particular chart, you know, so let me extend this rectangle at the top here. It's not really a double top, but it kind of is. You know, here's a top, here's a top. And so this whole area of what I'm going to call resistance is based on that, right? Because it's not only 1, 2, 3 candles we couldn't trade in that area, but all of these other candles we couldn't get up that high, right? And the market's a 23-hour phenomenon. So yes, absolutely. Herbert says this is why trading is personal, right? This is why trading is personal, 100%. Herb says, won't your order cancel the other order? I could have set it up as an OCO for sure. It's really easy to do. I didn't because in the presentations I like to be a little bit more dynamic because we will move our stop and we will move our target. And you could do that with an OCO also, but from demonstration purposes, I just want to show how really cool it is to actually just right click and you're good. So you know here's the you know, ATM strategy, and I'm going to go here. I can go to custom. It'll give me the ability to create OCOs. And this is very powerful. It just kind of looks like a little window right now, but it's very powerful. There's a lot of stuff to do on it. We're not going to do it today. It's kind of outside the scope of today, but sorry. Okay. The bottom, this is a simple moving average cross. The fast moving average is 6. The slow is 26. I'm looking for crossovers and cross unders. Right now, it's the moving average cross is starting to converge, coming close together, which isn't good for our trade idea. But you know, it's still, we got some time here. It's only 10:51. And on the bottom, we have the CCI, right? So on the bottom is the commodity channel index. That's my oscillator. Those are the two things that I have up here. And we kind of covered the settings already and how that all works. But the CCI is pointing up right now. We'll see how it goes. Again, this is really a volume profile driven point of control market. Look how many times it's traded over the point of control recently. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 different candles traded past that point of control. And that's how powerful it really could be. It really could be. In any event, let's take a look on the downside now. I'm going to draw another rectangle. I'm going to say, all right, let's take a look at where support tends to be. Now, this big wick kind of messes us up right here for sure. This big wick kind of messes us up because it's a big, big wick, right? In the time frame that wick occurred, was, you know, the 10-10 bar. So it wasn't even on the hour. It was an odd kind of time frame. And that wick literally is kind of like, all right, so it's going to extend our area. It's going to extend our area. So at a certain point here, getting close, because remember, we have an hour time frame here. We want to tighten things up, right? We want to tighten things up because, again, I expected to be out of this trade long before now, and I'm still in it, and that's okay. And you know, the lunch hour is approaching, right? And the paradigm of the lunch hour changes a little bit, et cetera, et cetera. So, Herbert, good point. Around that bar I just mentioned, the 1010 to 1020 bar was around the crude oil report. And I don't have that up right now, so I don't know. But so we do have quite a few, 1, 2, 3, you know, more than that. 1, 2, 3, 4, 5, 6, 7 bars now that haven't been able to close in this area. So that's kind of a good thing. That's kind of a good thing. So as we approach 11, and you know, we're going to end this thing pretty close around 11. we could do some trade management things. We could tighten up our stop, tighten up our profit target, get out, decide, hey, this trade isn't working, get out, or just kind of hold our own, just wait, right? Those are kind of the things we could do at this point. So let's see, let me check my notes, make sure I'm not showing something. Bear with me. We got a couple. We have about 6 minutes before the next candle, so we're in good shape. No, I think I got everything covered here. I'm just scrolling all the way up and down my notes just to make sure I got everything here. Bear with me. Oh, you know what we didn't talk about? The other thing we didn't talk about. Let's just go ahead and add. I'm gonna add the ATR because we promised we were going to talk about it. And we didn't talk about it. Right click, indicators, ATR. I'm going to highlight the ATR. I'm going to add it. I'm going to select it once it's down here in the configured section, and I'm going to look at the parameters here. So we've got 14 is the kind of the standard textbook Wells Wilder period for the ATR. However, I'm going to argue that that's a day trade. That's a daily chart number, right? So when Wells Wilder developed this, he literally was looking at daily commodity charts, daily stock and option charts, right? We're doing something a little different. We're looking at a scenario where it's a 10-minute chart, intraday trade. So it's a little different than how the original architect decided to do it. Personally, I'd change it to a 6. You could change it to whatever ever you like. I'm not going to change any of the colors. I'll just make the line width a little bigger. Oops, 2. Then we hit apply and OK. And then, oh, I didn't want it way down here, but that's all right. We'll kind of squish everything up. And there it is, right? This is supposedly measuring volatility. And we're pretty high, right? We're at 8. 8's a high number, but that's the weird thing about the ATR is it's subjective, right? There's not really a measure. So we like to look at the slopes of the ATR over time to determine, what's the direction of that volatility. And the direction of the volatility is still really, really high, right? It's really, really high. And then you just kind of apply that to the idea that we're trading around the point of control nonstop for the last, 7 or 8 bars, 6 bars. Then it's kind of giving you a feel for that volatility is being applied to a small range, right? So it's being applied to a small range. And so when this is high, perhaps you need to have your stop further away. When this is low, perhaps your stop could be closer. And that's kind of how I look at it. I look at the ATR in terms of volatility as, where do I want to place, orders? How close or how far away do I want to be close to place orders? In any event, that's really it. I mean, the ATR itself isn't something that is going to give you an entry. Another common way that people apply the ATR is to say, if the trade's in your direction, then they say, all right, I'm going to trail my stop, right? So the idea would be, and there's a name for this. I don't remember what it is. It's either chandelier or something like that, where you would say, all right, right now the ATR is 8. So I want to trail my stop 8 ticks below where the market is, right? And as the ATR goes down, let's say it goes down to 6, then I want to tighten my stop to trail it 6 ticks below where the market is. So there's a trailing stop type of application to the ATR, which some folks like to think about. And it's not my cup of tea, but that's how that's I don't know, that's a textbook kind of thing. Okay, so real quickly, last couple questions here before the last and final candle appears. KKHY, YYZ, could you put a vertical line on the graph at, say, 9:30? Yes, I absolutely can. I'm just going to go ahead to my drawing tools, and I'm going to go vertical line. I can put it wherever I want. You said 9:30 bar, that's what, this one? And there I have it. Now, one of the negatives of doing that is you kind of can't see the wicks, can't see the size of the wicks. So Hopefully that answers your question. And then you could just right click and remove. Let's keep on going here. Herb, why did you set your moving average to 6 and 26? That's just based on my experience, what I like to see, 6 and 26. That's it. You know, this is the moving average cross. I got my fast moving average set at 6. I got my slow moving average set at 26. And that's based on a 10-minute chart. And this is kind of the numbers that kind of work for me. Now, you could set them to anything you want. And I'd encourage you to experiment and try to get good at a certain thing. But let me show you. I know it's, just let me pull up here. Moving average 26. That's my slow moving average. In other words, it's going to take more data points to calculate. It's going to take more data points to calculate the next data point. And because it's averaging more data, it's going to move slow. It's going to be less sensitive to price. The 6 moving average is faster, right? It only takes 6 pieces of data to calculate the moving average. It's a simple moving average, so it's going to move faster relative to the slow, to the 26. That's why we call it fast. And again, you could change this moving average cross to whatever you want. It's totally your preference. Okay, possible to change trailing number of ticks after entered. Good question. I don't know the answer to that, but Alex, I'm going to write it down and I'm going to find the answer to that. I think once you set an ATM, you're set an ATM, but I'll see if there's a dynamic change you could make to it. Okay, so this is it. I think we're kind of at our end here. I do want to remind everybody trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Easy with the day trade margin. If you're not sure where you fit on that curve, reach out to us. We'd welcome to have a conversation with you, a confidential conversation with you with respect to risk capital, how much margins you should you be trading, the micros or the big ones, those kind of things we could talk to you about. That's it. We're on a real-time sim account today, and trade management for the rest of the day, total personal preference. I mean, if you're feeling like this range is just too stressful for you, move your stop to break even and maybe tighten your target, or take 2 points out of it. It's easy to do. You can just move your limit order. It's that easy, moving limit orders. You just literally are moving them like this, right? You're grabbing the label, moving them, and what that does is it cancel replaces the order. If this were a live account, I'm in sim mode, but this was a live account, all this would happen, really it's measured in milliseconds at the exchange, through the exchange, right? So I just grabbed and I moved, and ideally I would move this to the point, the transition here between prices, the top of the value area. And then let's just kind of look at where I put the stop at this point. So a stop could be at break even if you wanted to, and break even is right where we're at. Or look at this low wick, that you got to respect that low wick right there. So maybe keep it there. But if you wanted to kind of, all right, listen, I'm going to put it 1 tick above my entry, right? So if I do get stopped out, at least I get my commission back. So that's another technique you could kind of apply here. At least I get my my commission back. So I brought the target. I'm a little bit shy of where I want to be. Let's bring it down one more to 50. Oops, did I do that right? Yeah. And so I brought it down to the top of the value area, that transition. Okay, there we go. So we got it. The transition between the top of the value area and prices above value, that's that dark blue, light blue. Now, don't keep in mind, since I didn't set this up as an ATM strategy, an OCO, I'm going to cancel it. I'm just going to click on that X. All right, trade over. And we wait and try to find another trade opportunity if there is one, or we say, hey, it's lunchtime, and maybe we want to kind of get lunch, something like that. In any event, any last second questions? Type them in. I'm going to type in my email address, and I'm going to ask Josh to go ahead and shoot that everywhere. Feel free to reach out to me. It's jim.cagnina@ninjatrader.com, and feel free just to shoot it in. Actually, if I put the chat, I wonder if you could see this. Could you see the chat box, everybody? Jim.cagnina@ninjatrader.com. Josh, my colleague at Ninja, is going to cut and paste that into the folks that are not in the Zoom meeting because it's streamed other places as well. Okay. Oh, we're all on. Okay, nope, we are on Zoom. That's why I can't see it. Okay, my bad. Herbert, you know where I live. You know how to get a hold of me. Other than that, I think we had a good session today. Everything is good in the universe. So remember, thank you for coming. Take care out there and be good to each other. Until next time.